because optically they're devaluing the value of the currency, and it makes these assets expensive, but their wages don't go up in the same way. So that's one thing. The value of the currency goes to zero over time. So it's not an instant collapse. It's a slow thing that just makes life harder for everybody. The second thing is that most economic value is based on two things, either knowledge or labor. You either physically do things or you mentally do things. The value of those two things over time is going to zero because of the rise of AI and robots.
Hey guys, welcome to Everyday Finance. In cryptocurrency, the past 72 hours have been harsh. As traders hurried to unwind heavily leveraged positions, Bitcoin fell from new highs into a dramatic downward swing that temporarily brought the price into the low six-figure region. Somewhere between $110,000 and $116,000 depending on the platform. That was no little squeeze. As stop-loss cascades fed on themselves and positions were forcibly terminated, numerous publications are monitoring large liquidations across derivatives platforms. With headline estimates in the single and double-digit billions of dollars, what caused the fear? Thin liquidity in some areas of the futures market, mixed with a sudden surge of macro stories. Trade war rhetoric and tariff threats that shook risk assets created a 1-2 punch. In addition to increasing losses, this combination led to a historic increase in forced sales and trader liquidations, with multiple estimates suggesting that billions were quickly destroyed. In a market that is already driven by momentum, like cryptocurrency, markets detest unexpected policy shocks. A harsh washout and rapid downturn are the outcomes. In today's video, we discuss the implications of this chaos for cryptocurrency investors, as well as the possible outcomes that could put the market back on a steady upward trajectory. Please hit like, subscribe, and comment if you found this helpful.
Hold the Bitcoin on your balance sheet in the business, and we're seeing the rise of that too. So you just use your business as your private savings vehicle because you're actually accumulating wealth in your business as you grow it because you own shares. So why not just say, well, as opposed to if I don't need the money right now, if I can just take what I need to live and do this to cover my costs, well, then why don't I just have a savings account within my business, which is my cash balance, and I invested in crypto? Okay, that's kind of interesting. The other thing, there's many arbitrages in this whole equation. One of them is quality of life. What do we work for? Actually, in the end, yes, sure, there's status, and first you got the Maslow's hierarchy of needs. The bottom rung is you need food, shelter, health, the basic things, and then after that, it actually comes more down to ego and that kind of stuff. But if you want to cover the bottom tier of that, your food, your shelter, but have a quality of life, people don't realize that they can just move. I'd figured this out. When I was living in London, it was expensive, I was stressed, it was busy. I moved to Spain, and for the price of a 3-bedroom apartment in a relatively nice part of London, I bought a 5-6-bedroom house on 10 acres near the beach on the side of a mountain in a national park. It's like, oh my God, the sun shines, 300 days a year, and taxes were lower, and the restaurants were half the price of London, maybe a third of the price. So suddenly, on much less money, you're living like a god. And it's like, okay, this is possible. People don't realize this. So in America, you can move to different states, and we're seeing people move around. So they're leaving California, whether they come to Texas, but Texas doesn't give you a lot of quality of life, just less taxes. I mean, we're here now, and it's not, I wouldn't say it's the highest quality of life. We're seeing people move to Nashville. Okay, higher quality of life. You got nature around you, stuff like that. Older people tend to move to Florida for some of that. Some people have moved to Puerto Rico. Okay, I get that. Really? There's whole Latin America. You can go and live in El Salvador, Nicaragua, Costa Rica for a fraction of the price. You can have a house on the beach or right near the beach. the cost of food is a fifth of that in the United States. And you can work on your laptop from anywhere. Okay, talk about arbitrage. There's a lot of people doing that in Thailand. So you see a lot of people doing that in Thailand. But there's a whole bunch of countries you can do that with, where you can be connected to the global system. You can live super cheaply. It's pretty safe. And that gives you a much different start than having to think about, well, how do I afford this house in LA? I mean, that's not easy. A lot of people move to Colombia. Fantastic quality of life, amazing climate, cheap, great quality of food. Spain, I think, is one of the highest standard of living on earth.
It's cheaper.
It's a lot cheaper than here. It's probably about 50% to 60% cheaper than here.
I never would have guessed that. I assumed it was similar to the UK. Yeah.
Yeah, no, but it's more than half the price of the UK. So it's cheap. The sun shines, the culture's amazing. It's actually, it's the second least populated country per square mile in Europe. So even though there's a lot of people on the coast and in Madrid, a lot of it's just pure nature. You've got the Mediterranean Sea, the Atlantic. You've got mountain ranges. You've got skiing. You've got desert. You've got kind of lush forests you've kind of got everything and multiple thousands of years of culture and the best food in the world.
Raoul Pal, CEO of Real Vision, disputes the notion that the tech or cryptocurrency industries are experiencing a bubble akin to the dot-com bust of the 1990s. He contends that valuations stay well away from the severe levels that characterize actual bubbles, staying within one standard deviation of long-term trends. According to Pal, high PE ratios frequently indicate monetary debasement, in which the money supply expands more quickly than real GDP, driving up prices more quickly than earnings. This does not necessarily imply that speculation is out of control. Values are raised by this denominator effect without indicating a bubble. Pal applies this logic to the cryptocurrency market and Bitcoin, pointing out that the price of the latter is likewise within one standard deviation of its historical trend. Since a large portion of the $10 trillion in U.S. debt won't roll over until next year, he attributes this deceleration to the ISM business cycle and delayed liquidity brought on by longer debt maturities. Pal believes that the primary driver of both stocks and cryptocurrencies is global liquidity, which is influenced by debt, demographics, and monetary policy. He thinks the recent downturn is only transitory and that another spike in risky assets will probably be triggered by the next wave of liquidity. His investment strategy strikes a mix between optimism and prudence. He keeps his positions open throughout cycles, but he adds to them during market declines and takes profits during robust rallies. Pal sees just cycles of liquidity, not bubbles. Energy for the next expansion increases as long as liquidity remains limited.
And so after a while you say, okay, do I want to be the richest person in money terms or do I want to be the richest person in life terms? And when I was at university, my girlfriend at the time's mother lived in Mallorca in Spain. It's a gorgeous island. And we were staying at her apartment and we had gone to the beach. It was like Easter, sometime around Easter. So the weather was nice, not perfect, but it was nice. And somebody was grilling sardines on the beach and selling cold beer. And it cost nothing. And we went down there, sat on the sand and drank a cold beer and ate these sardines. And I looked up and there's this little mini peninsula with some palm trees, some pine trees, typical of Spain. And there's this long table of like 25, 30 people. And it's like grandparents, kids, friends, family. And they're all eating paella up there for lunch, drinking wine, having fun. And I'm like, okay, that's life. These people are living their lives to the fullest, overlooking the sea, eating simple food, having this fun. And that stuck me every day when I was on the tube at 5 o'clock in the morning to get into Goldman or wherever I was working or the hedge fund. That was the thing that I was fixated on, is how I'm going to manifest that feeling, not that exact scene, but that feeling of freedom, nature, quality of life. And that's what I went for. I went for that trade-off. So it became natural to me when I was at the hedge fund and I wasn't having my best year. It had 3 good years. I wasn't having a great year. Couldn't figure everything out. And I'd had a house in Spain for a while. And that's another story in its own right. That's actually a good story. But I'd upgraded that house. And I was going a lot to Spain because I bought that house, but prior I had this other house. And I was going a lot to Spain. A friend of mine called me up and goes, how many times have you been to Spain this year? I said, don't know. I said, check. I checked, said 32 times. He goes, Raoul, you're running away from something. And I'm like, yeah, I am. And what I wanted to do was actually run into this quality of life because it was becoming so different to the other quality of life of work and stress and everything else. And you looked at that and you're like, okay, this is the trade. It's not about being the richest man. I could have stayed at the hedge fund or could have stayed at Goldman and made more money. But the massive lifestyle leap, even though I was living in a nice apartment in London, everything, the massive lifestyle leap was so worth it. Now, there were trade-offs with that in the end as well. But that whole game was kind of why it came naturally for me, because I like adventure. I've traveled to, 120 countries around the world. I've walked across deserts, climbed mountains. I've driven from Northern Europe to the central of Africa twice. I've done everything. I've been shark diving around the world. So adventure is something. Outside my comfort zone is where the magic happens. Focus on that, and your life is much more enriching. You can't literally, you know nothing as an 18 or 19-year-old, and you think you're sort of figuring the world out. All you're figuring out is your small little part. And you might get your political opinions from your parents and your social opinions from the people around you. And you might read something and say, well, that's interesting. Go somewhere, go to South America, go to India, go to Southeast Asia, and go to Australia, go to Spain, come back. You're an entirely different person. You understand people better. Because humans are amazing. Life is amazing. The planet is amazing. You come back so much more respectful of people and different opinions. You come back so much more respectful of different ways of life. Because what you read in the media is their life bad, this life good. Freedom, impoverished, awful, crushed people. When you actually go to these countries, it's mainly bullshit. It's just political narrative. You learn so much about what the world is like that it will change you forever in positive ways you don't yet understand. It'll also make your career 10 times more successful because you can understand different perspectives and you see opportunities where others don't. And I used to see this when I was at Goldman. We ran the graduate training program. Yeah. Impossible to get into because at the time, Goldman was the single most aspired to company for MBAs on earth. Right. So you just couldn't get in because it was like the best of the best from the best universities. And what we got was a process sausage factory of the top universities, of kids who only wanted to be investment bankers, who spent their spare time getting internships and going to the Hamptons and hanging around investment bankers and acting like investment bankers and dressing like investment bankers. And I tell them they're fucking robots. And I'm like, you're unemployable. You don't know how to speak to normal people. What do you think the portfolio manager that you need to talk to who's in Sweden has any interest in your stupid American investment banker narrow view on the world? So I used to hire anybody who'd travel, go and do different things and interesting things, because if you haven't been outside your comfort zone, you haven't seen the magic. Okay, that's a big question. So everything going to zero, there's two forces that really I'm focused on. One is, you alluded to earlier, and we can go into it in more detail in a bit, which is the fact that the system of money that we know is being debased, which means they're printing money. And why are they doing that? They're doing that to pay the debts that we've accumulated over the years as nations, not only the United States, but all over the world. And that's driven by this aging population that's been happening. So money essentially keeps falling in value, and people realize that by the fact that their wages actually don't go up, but the cost of things goes up. And I'm not talking about food and stuff. That kind of inflation is more cyclical. What I'm talking about is the important things for young people is like, can I buy a house? So young people start thinking, why can't I buy a house? Why do houses still go up and I'm working really hard and I'm working 2 or 3 different jobs? That's because optically they're devaluing the value of the currency and it makes these assets expensive. But their wages don't go up in the same way. So that's one thing. The value of the currency goes to zero over time. So it's not an instant collapse. It's a slow thing that just makes life harder for everybody. The second thing is that most economic value is based on 2 things, either knowledge or labor. You either physically do things or you mentally do things. The value of those 2 things over time is going to zero because of the rise of AI and robots.
Tom Lee, founder of Fundstrat and chairman of BitMine, agrees. Instead of seeing the current crypto weakness, particularly in Ethereum, as a hint of collapse, he and his colleague Mark Newton see it as a typical correction. After Ethereum's September gain, Newton predicts a conventional 3-wave retracement. With the asset finding support in the 4,200 to 4,220 zone before rising towards 5,500. This implies that the general trend is still bullish. Lee also rejects analogies to the IT bubble of 1999, pointing out that there are no indications of overzealous enthusiasm at the moment. Lee and Pal both believe that the current market phase is the early to middle stage of a long-term bull cycle that is fueled by expanding liquidity, a technological adoption, in fundamentals what Pal refers to as the exponential age. They have a clear message in common. Short-term volatility is common and not cause for concern. Recognizing that long-term returns are created during times of uncertainty rather than during exuberant peaks. Investors should maintain their patience and knowledge,